Welcome to Subramani. Uh, I'm going to talk to you about some thumb rules. Let me start by saying I don't like thumb rules because thumb rules are too vague and it is not applicable to everybody. But you can take some of these rules and make sure that it is applicable to you and you can calculate your own numbers. So, what am I trying to say? So, first thing is your housing cost should not be more than 25% of your take home salary. When I say housing cost, it could be rent, it could be EMI, I don't care. And I'm assuming that there is a total income. I'm not talking about, when I talk about income, I'm not talking of the man's income, I'm talking of the total income of husband plus wife. Then it should not be more than 25%. Now, here is the caveat: if the girl is likely to have a kid and that income is likely to stop, or for whatever reasons, if she wants to quit and start off on her own, then please be dependent. And you think at some stage you will be dependent on only one income, then please do all your calculation based on that. So your EMI stroke rent should not be more than 25% of your take home salary. That's it, right? Take home income, whatever. I mean, if you're a business, if you're a doctor or whatever, the take home that you have every month, it should not be more than 25%. So your housing cost should be less than 25% of your net income. The mortgage that you take should not be more than 2.5 times your annual CTC. So if your annual CTC is 1 crore, you can take a 2.5 crore loan. If your annual CTC is 10 lakhs, you should not take a loan more than 25 lakhs. Now this is very difficult in Indian metros. This is largely an American rule, so you have to play around with it a little. My suggestion is you start doing SIPs in the well, and after some time you will be able to make a bigger down payment than you are able to make now. So there's no great hurry to buy a house. You can buy a house at a later stage. So invest very well, and after a few years you will have more money to make a down payment. Then you will be able to stick to this rule of 2.5 times your CTC or 3 times your CTC. Right? I think that should be an upper limit given the times of uncertainty. However, if you have a job where you have some ESOP and you have some visibility on the ESOP vesting and being able to sell, and my suggestion would be to use a big part of it to repay the loan. Then you can fool around with that 3 times, can become 4 times. But anything more than that is very risky because things could go wrong, your company could go bankrupt, the ESOP may not vest well, it may not be worthwhile, so things can go wrong. So when I'm giving you these rules have been thought of very well, and you could implement it. So that's why am I not giving very complicated calculators which are available? It's simply because when it's very complicated, people don't use it. People just skip it. So I'm saying make these rules very simple. 3 times, 2.5 times your CTC, or 25% of your take home. This is very easy. You know your take home pay. Suppose your take home pay is 1 lakh. You know that your rent or EMI should not exceed 25,000. It's as simple as that, as quick as that. You don't need any elaborate calculations. My suggestion is, when you're young, there is no reason to buy a new car. Okay, when I'm saying this, consider the car cost per year also. So there is a car cost of running the car, of fuel, of paying tolls and some fines which you pay. All that together is the cost of running your car. Now, apart from that, you are also going to buy a car and use it for some time and then sell it off. Let us say you bought a car today for 25 lakhs, right? I'm not talking how you funded it. I'm saying you bought a car for 25 lakhs. That 25 lakh car you sell after say 5 years for about let's say 15 lakhs, right? So the cost of carry of the car has been 10 lakhs for 5 years. That is 2 lakhs per year is the cost of the car, just on the depreciation, right? I'm not even taking inflation into account, but that is the depreciation. So you have the car depreciation, you have the car fuel, you have the interest if you borrowed from the bank or somebody to be able to buy a car, plus maintenance, plus a driver. So you take all these costs and see how much is the car costing you per month or per year. So that could be a phenomenally high amount. So just you should know how much that number is, And I think you should cap that number. You want to cap it at whatever number, or 1 lakh per month, or 1 lakh per year, or whatever is the number which you are happy with. So consider all these costs, consider the cost of depreciation. Now, when you consider all this, you will realize, especially for youngsters, it is worth buying a second hand car. Do consider the second hand car market. It is not well marketed, it is not well pushed. During this COVID times, a lot of people desperately sold off their cars. So you got good deals. So find out whether you're getting a good deal. Please remember, banks will not be too happy to give money against a used car simply because there is no dealer passing on any discount to them. So the used car rate of interest will always be higher. It doesn't matter. Use your own money, pay cash, buy a car, and use a used car. Perfectly all right. It makes sense. Of course, if you're a millionaire, you've got a lot of money, then it's a different thing. But otherwise, don't buy a used car. Next rule, save at least 20% of your take home salary. Now, this is a very, very vague number that I'm saying, because if you are a young boy or a girl staying with your parents, not spending on anything, then it could be 80-90%. But if you are supporting a family and you're sending money to your parents, and like blah blah blah, then this 20% might be very difficult. But for yourself, you come out with a number. Maybe it is 18, maybe it is 22, maybe it is 25. Higher the better, of course. So find out where you are, and all this can happen only when you write down your expenses. It cannot happen out of the blue. So that is a good one. Try to earn at least 5% of your net worth. So if your net worth is 1 crore, your income should be not less than 5 lakhs a year. Now, this is a very, very low number, you would think, but as your net worth keeps increasing, if your income is not increasing, two ways to look at it. One, go and get another job, or get rid of some of the assets and make it more efficient, so that there is less pressure on you while retiring, right? So remember this rule: 5% of your net worth. So that's one way of monitoring your net worth, and also monitoring whether you're earning at least 5%. This is at least, not maximum, right? Another very important thing is the think before you act, before whatever it is, whether it is painting your house, whether it is replacing your car, whether it is taking a vacation. Apply your mind. Don't do it and then say, "Oh, I didn't think of this." Right? Remember that your retirement is if your retirement is nearby, your children's education is going to cost you money. Children's marriage is going to cost you money. I'm not even getting into voluntary or involuntary. So some of the involuntary expenses, you'll say, "Oh, what can I do? My wife wanted this. What can I do? My daughter wanted this." All right, it doesn't really matter. If you are going to spend, be prepared for it. If you're not going to spend, then it's a different matter altogether. When you have debt, right, pay off the highest and the most expensive debt first. This is so simple, but it is not so intuitive. People think the biggest debt should be paid off first. So they'll say, "Oh, I have kept all my small loans, but my mortgage I'm paying off very quickly." And I tell them exactly the reverse. Get rid of every other debt other than mortgage, because the others are likely to be far more expensive than a mortgage, right? So if you have a mortgage and if you have other loans, repay the other loans first. Simple thumb rule: repay the most expensive debt first, right? So after that you can prioritize, but getting rid of debt is important, and getting rid of the most expensive debt is the most important, right? So pay off your highest debt first. Budget for whatever you need, right? So a big company like say Hindustan Lever does not buy something if it is not in the budget. Why can't we do that for ourselves? Especially if you are living tight on a budget to budget. See, if you're punching way below your weight, let us say you calculated everything and you need 2 crores for retirement. You are 64, 65 years of age, and you have already retired, and you need 2.5 crores for retirement. Somebody has done a calculation and showed it to you, and you have 17 crores or you have 18 crores, then where is the question? You can afford to be inefficient in your investment. You may feel bad about it, but you can afford to be inefficient. But if you are tight, if you need 2.5 crores and you have 2 crores 70 lakhs, then you need to be tight. Then think about every act of expense that you do, right? Whatever is the expense, or whatever, try to translate into an hourly rate. For example, if you are earning 30 lakhs a year and you work 300 days in a year, which means you are earning about 10,000 rupees a day. So if somebody wants to come to your house and paint the house or things like that, always translate into how much is it costing you, and vis-a-vis how much you are capable of earning. That includes leisure also, right? 65 days of leisure also. But I'm saying on your working day, you're capable of earning 10,000 rupees according to your CTC, right? Now, it could be more, it could be less, but think of everything like per hour, how much is it costing you? Per year, how much is it costing you, right? So, think of all that, like your car, what is the total car cost, including cost of carry, all that together, how much is it costing you per day? Right, that's the way one has to look at it. So therefore, never go shopping without a shopping list. Think of everything as a, make your will, make your documentation, right? So these are some of the, I would have said, if I were a Christian, I would have said the commandments of finance. Hindus don't have commandments, so whatever you call it, these are the rules by which to live, and I made the rules as simple as possible. Let us debate about it on the comments, that you may agree, may not agree, or you may say real estate prices in India are too high, whatever it is. These are the rules which I like. See whether it works for you.